On today's episode, I'm going to talk about how to invest with a small account. So let's get started. Alright, so like I said, today's episode is going to be mainly about the small account. And this is a discussion I've even had with close friends. Some of my close friends say, I only have a few hundred, maybe $1,000. Can I make money in the market? And me, as a long-term investor, I am not a trader, I'm a long-term investor. I would say yes, but instead of just saying yes, I actually wanted to show and prove results that yes, even with the small account, you could make money. So I ended up creating a small account, and that's the one we're going to talk about today. But if you guys want me to do any other accounts, feel free to let me know. Like we can see here, I have a small account, which is the one I'm going to talk about, which is about $1,700 right now. I have a medium account, which is close to $8,000. And then I have a big, this is big to me, right? To others, it might still be pretty small, of about close to a little bit over 21. So if you guys want me to take a look at any of these other accounts, make sure to post on the comments and let me know. Like always, guys, don't forget to subscribe, don't forget to hit that thumbs up, and don't forget to hit the bell. It helps out the small channel out so much, and I truly appreciate it. Alright, so let me first talk about this small portfolio. This small portfolio, I probably started less than a month ago, and I started with originally $1,200, and this $1,200 was supposed to simulate the stimulation check that most people receive. And then what I started doing is every Friday I put in about $100 into this account, and this is I ended up making a poll in my YouTube account, and most people wanted to see about $100 per week portfolio. So obviously I did not hit it at the mark. There were so many companies reporting earnings that I just didn't have time to come up with these videos. But now it does seem to have slowed down, so I'm deciding to pop this video. So every Friday I put $100 into this account, and every Friday I use that $100 to buy one position. So again, the main purpose of this portfolio is to show how even a small portfolio can make money as a long-term investment. So pretty much I said, $1,200 right away from this account, followed by $100 every Friday. Right now, if this was just pure cash, this account would be just $1,500. That's how much I deposited. Right now, it's actually sitting at $1,670, and that's a gain of $170, and it's up 11% since I started. So again, that's pretty much 2 free stocks if I was just to look at it, and this is just in a matter of 3-4 weeks. And again, one of the great things, I'm going to talk about some of my tips, but you're going to see all these companies if I'm sitting at it with 15 companies at the moment. All these companies I do analysis on. You can check out my past videos, and I have done a video on almost all of these companies. For me to invest, I need to understand, hey, this is a company I know what's going to do. I know the overall market. I'm bullish on the market. And if the stock price drops, I'm not gonna freak out. I think that's one of the biggest reasons many investors lose money is because they invest in companies that they don't know much about it. So when all they know is about the stock price, and when that stock price drops, they don't know why they invested, so they pull out for a loss. But not for me. Every single one of these companies, I know what they do. I know what kind of growth revenue-wise they're seeing. I know their leadership. So if the stock price goes down and I'm still bullish on that sector, you're going to see me buy even more. So just some quick tips that I follow, The first tip is I always put money on a weekly basis. And I think this is the most important thing about growing an account. For example, if I was just to put money in at one time, for example, if we take a look at SPY, I think there was a point in 2016 or in 2018. If you would have bought at that point in 2018 compared to now, your account will probably be flat. But if you invest in a weekly basis, sometimes you might pick up when the market is really down. Sometimes you might pick up when the market is pretty up. But at the end of the day, your account is moving because it's dynamic. You don't want that static thing. So I always put money on a weekly basis. And I think that's one of the greatest way to grow your account. The second tip I do follow is do research before investing. Like I mentioned, if you don't do your research before investing, the moment something bad happens and you don't really know why it happens, or you don't understand how this might affect the business, you're likely to pull out and lose money. The next tip I follow is don't put all the eggs on one basket. And we're going to take a look a bit at my portfolio and how it's distributed. But I have 15 different stocks right now. And the thing with 15 different stocks, if one of those stocks does bad, I'm only gonna lose $100. But if one of those stocks does amazing and provides like 10 times the results, I have the potential to get a lot of money. So not putting all the eggs on one basket protects me from the downside. But it also, I feel like a lot of people say, hey, with a lot of different portfolios, if your companies go up, they're not gonna go up that much because you have such a small percentage in your portfolio. But no, that's not true. Just a 5% stake in your portfolio. If that one goes 5x, if that one goes 10x, that will make a nice gain on your overall portfolio. So you only need a small position to get some great gains. And actually, another tip that I do follow that's actually not here is that fractional shares. Right, it's the year right now. We're on 2020, guys. If you're not in a broker that does fractional shares, I don't know what you're doing. Fractional shares is the greatest thing for investors right now. We all have free investment right now, right? You don't get charged a fee for buying a stock. But I do believe fractional shares is one of the greatest things, especially for small time investors, right? If I want to buy Google, I can just buy Google for $100 if I had fractional shares and not put in $1,200. So it opens up the possibilities of so many different companies, and it allows you to really be in control of your account. So for me, the broker I use is Fidelity. They do have their downs, but the greatest thing is that they do have fractional shares in their phone application. All right, so now let's take a look at my portfolio breakdown. And remember, all these stocks, it should be 15 positions, not counting cash. So 15 positions all started with $100. So in theory, they all should be worth the same amount of percentage wise. But we see here that there's certain companies that are a little bit higher than others. And my top winners we're going to see are Datadog, Spotify, and Fastly. All companies, like I said, that I have talked about in my previous videos. So don't forget to subscribe, guys, and hit the bell. I do at least one video a day, and every day I'm learning so much. So don't forget to do that. But look, everything is pretty broken even. So even if one of these companies goes down, my whole portfolio is still gonna be okay. But look, we're already seeing Datadog and Spotify and Fastly. They started at the same level as the other ones, but they are now a much bigger percentage of my portfolio. And that's to show, right? Even just one small position, if it's a big winner, it can pretty much change your whole portfolio. So now let's just talk about my top 3 performers. And here I'm not really gonna talk about each position individually, right? Because it would take me forever to do that. So if you guys, all these 3 companies, I know for sure I have done videos on. So feel free to check out Datadog, feel free to check out Spotify and Fastly. But all of these 3 companies are companies that have taken advantage of COVID-19 or the part of the market that's doing well. So Datadog is a clouding network. Spotify, you guys, most of it know of it. I'm very bullish in the voice and audio entertainment realm. And now we saw my latest video was actually Spotify, and I'm even more bullish on it. The next one is Fastly, and again, this one is also a clouding software company. And I do think right now it is the time to enter into the clouding world, the esports world, the video gaming world, the e-commerce world, the audio world, and the video entertainment world. And here you can see, right, just these 3 companies, right? Datadog up 33% since when I bought. Spotify up 30%. Fastly up 22%. So again, these are just these 3 companies pretty much gave me a free $100. And the main thing is all of these are strong growth revenue. Datadog, Spotify, and Fastly are growing revenue on annually over 20%. And that's what I'm looking for. I'm looking for high growth companies that are growing revenue in double digits, have a strong balance sheet, have strong margins, and have very little debt. And overall, the market is something I understand. One thing I have learned from these companies is don't be afraid to invest in companies that are doing well. I feel like, and this is something that I do too, the mindset of buying companies that look cheap because the price has dropped down and you think, hey, this company can't go any lower. Let me tell you, it can go lower. And sometimes it's counterintuitive because there's companies that have just reached all-time highs, but at the end of the day, they still keep going up and up and up. So to me, don't be afraid to invest in companies that are doing well already. Even if they're already up, there's most of these companies will continue to go up and higher as they continue to build their overall brand and their overall business. So that's one thing that this portfolio has actually truly helped me understand is do not be afraid to invest in companies that are don't seem cheap in stock price, right? But cheap in stock price doesn't really mean anything. And all these three companies, I understand the market. Like I said, I did my due diligence. I read their 10Q report. I read their earnings report. I listened to their earnings call. I look at stock news and I understand each of their market. So if one of these actually goes down, I would definitely go out and buy more positions on these companies. Now let's talk about my worst three performers. And to be honest, I'm actually pretty happy to see these. My worst three performers are two are in red and pretty much break even. One of them I lost $4 and one of them I lost $1. And my third worst performer is actually up 52 cents. So I did learn a lot about this as well. So I'm actually this is actually a learning process for me. And right now my two biggest losers, which equal about $5 loss, are KRE, which is an ETF that follows the financial bank, and Berkshire Hathaway's. And one thing I do know about these two companies is one, these are not companies that are taking advantage due to COVID-19, right? Unlike Spotify, unlike Clouding, where due to COVID-19 and just the overall change in the market, they can actually take advantage and pick up more customers. These two companies, right, they don't have that ability to do that. So I feel like that was my first mistake. I should now start focusing and thinking about the future and thinking how the overall market can change and what companies will react to that market and have the best chance of gaining. And then you have other companies that actually are with the market and just don't move. For example, Dropbox. Dropbox is a very strong high growth company in revenue wise, and it's actually in the clouding sector. But right now the market it's not really showing anything, and it's pretty much flat at a 0.52% gain. But to me, this is a long-term game. So one thing is, don't sell out too early either, right? I feel like some people might be like, hey, Dropbox isn't going anywhere, so let me sell out of this position and buy something else. But watch, the moment you do that, the next time you look at Dropbox is gonna be up over 10, over 15%, and you're gonna be like, why did I sell out? Obviously, this is not a fortune telling, but I feel like that happens a lot. And one of the greatest things as an investor, and one of the true weapons you have to master is that patience. Dropbox, I'm still pretty bullish on. Even though my other cloud stocks are going up, I feel like Dropbox still has the potential to continue to go up. Another thing I learned here is the best part about diversifying your account is even if some of your stocks are slow or bad, it doesn't affect my full portfolio, right? Pretty much all these companies are either bad or pretty much flatline, so I haven't made money out of them. But my overall portfolio, because I have 12 other different positions and all of them are still doing good, my portfolio is still looking healthy. So that's it, guys. That was a quick overview of my account and why I invest and how I invest. And like I said, guys, every Friday I do buy a position in a stock. So if you guys want to know about that position, I usually post it on YouTube and I post it on my Discord channel. Again, none of that is advice, but make sure to follow and make sure to post on the comments which one of these companies you like or which one of these companies you want to learn more about. And actually, there's one more thing I want to talk about. And no, this is not a paid ad. There's this great person who has actually been great support for me, and his name is Chris, and he is the creator of this amazing website, LazyFA.com. And if you are a long-term investor, LazyFA.com is one of the coolest websites you can use, and it's probably very cheap. They do have a free version, and there's also like a $7 a month version, and I use the pro version, which is only $12. I mean, that is ridiculous cheap compared to all these other stock things out there. And I'm actually going to show you what Lazy FA does. And like I said, right, this is not a paid sponsor. Chris did not hit me up. He did not do anything, but he has just been great support for me. So I feel like I need to pay it forward, and I will continue to pay it forward once later on. But here, once I'm in Lazy FA, I'm actually logged in already. And let's say I want to take a look at a simple company. Let's take a look at Apple. Let's be lazy. So here in lazyfa.com, one of the boringest, of the worst things you can do is, even to this, one of the things I hate is reading, but I still enjoy it. But looking at a company's 10Q report, 10K report can actually get pretty boring. And lazyfa.com actually helps me out, and it's a pretty easy way. So it ends up pulling all that information from the SEC website where you see the 10K report, the 10Q report, and it actually puts it in a graphical matter, so it's a lot easier to do. So right, in your 10Q report, you usually have three statements. You have your income statement, you have your balance sheet, and you have your cash flow statement. So here I can, instead of looking at just past data, I can see everything very easily. I can see, look, Apple's revenue growth is growing every year. I can take a look at quarterly. I can change it to line. I can look at cost of revenue. I can take a look at so many different things. And again, it makes it so easy to try to understand just the numbers of the company. Again, the balance sheet, you can see your total assets, total liabilities, total debt, cash and cash equivalents. Same with cash flow. You can see how things are moving. You can see if there's any red flags happening. And then even better, right? This is what I end up using the most, is this balance sheet thing. If you scroll down, it actually shows you the distribution of assets and liabilities. And look, I can now see how much cash this company has, how much current investments, how much long-term debt, and how that changes over time. And how this company, I can see already from Apple, it has continued to pay down its debt, and we see that debt going lower. Another thing we can see is this company's revenue growth. On the annual revenue growth, how is this company's revenue changing? Again, it doesn't do everything for you, and you still have to do other research, but I do think it's a great tool to just look at the overall company and how it's doing. I use it almost on every company that I do, so definitely check out the website, even if it's just a free version. And like always, guys, don't forget to hit that subscribe button. Don't forget to hit the thumbs up and the bell. Like I said, it helps the small channel out so much. Take care, have a good night, and see you next time.